Hi everyone, welcome to my channel. On this channel, I'm going to show some weekly or bi-weekly forecasts on stocks and currencies. Also, I'll be making videos that are related to finance, such as educational content on currencies and stocks, analytical methods such as fundamental analysis and technical analysis, and videos that break down on financial events. So, if you like the topics that I've just mentioned, please subscribe and hit the notification bell button. In this video, I will focus on the outlook of stocks and currencies. The method that I will be using to come up with this outlook is called technical analysis, but if you're not familiar with this, it's fine. I intend to make a video to explain what technical analysis is in the future. Before I start, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not a financial advice, and if you are using this content as a guide to trade, you are doing it at your own risk. Alright, let's start. The first currency pair that I have for you is Euro Dollar, which closed at 106.91 on the 22nd of June. I believe Euro Dollar is forming a symmetrical triangle on the weekly chart. A symmetrical triangle is a neutral pattern. The new outlook will be determined by the direction of the break. That is, if there is a breakout, it is considered as bullish confirmation, the outlook is bullish. If there is a breakdown, it is considered as a bearish confirmation and the outlook is bearish. We cannot determine what the outlook is until there is a breakout or a breakdown. In any case, a breakout or a breakdown suggests a move of 795 pips. Next up is the sterling against the dollar, last closed at 1.2640 on the 21st of June. I believe that this currency cross is also forming a symmetrical triangle. As said for the euro dollar, a symmetrical triangle is just a neutral pattern. We cannot confirm its outlook until there is a breakout, which is a bullish confirmation, or a breakdown, which is a bearish confirmation. Either way, this pattern suggests a move of up to 1,183 pips. Now, seeing how price action was rejected over here at the trendline resistance for 2 consecutive weeks, I suspect that the next move for the sterling dollar is downward. Whether it breaks down or it bounces off the support trend line, we will have to see. Next, we have the Australian dollar against the US dollar, Aussie dollar for short. Last closed at 66.39 on the 21st of June. I believe it is attempting to break out of this resistance trend line, and if successful, success meaning that it is closed above this resistance trend line on a weekly basis, because this is a weekly chart. If this happens, we get a bullish confirmation, and the outlook for the Australian dollar against the US dollar is deemed bullish. Otherwise, we may just get further declines from here, which suggests that this 3 weeks worth of rejection ended in a lower Australian dollar against the US dollar. This suggests a move towards the support trend line, and once there is a breakdown below this support trend line, which is a weekly close by the way, this will be a bearish confirmation, and this suggests a move of up to 950 pips. The Kiwi dollar is also forming a symmetrical triangle, last closed at 0.6118 on the 21st of June. This last 2 candlesticks over here suggest that there is some form of resistance going on close to the resistance trend line. So we may get some decline in upcoming weeks. But in any case, if there is a breakout weekly close above the resistance trend line, bullish confirmation, a bullish outlook is confirmed, and it suggests further upside. Otherwise, Kiwi dollar could just trend lower towards the support trend line, and once there's a breakdown below this support trend line, a bearish outlook is confirmed, and this suggests a move of up to 980 pips. Now, I've shown you symmetrical triangles on the euro dollar and on the Kiwi dollar, so it is no surprise that you will also see a symmetrical triangle forming on the Euro Kiwi chart. Last closed at 1.7477 on the 21st of June. Actually, we have had a completion of this symmetrical triangle last week. Now this is the type of price action that we're looking for, a breakdown, a weekly close below the support trend line. This is what we're looking for across euro dollar, sterling dollar, Australian dollar, and the Kiwi dollar that you've seen earlier. This tells us that this pattern is completed towards the bearish direction. Bearish outlook is confirmed. The textbook target is at 1.6435. Now, just a short note on the textbook target. This is just a guideline suggested by the chart pattern, measured from the height of the pattern to the bottom of the pattern. So just take this as a guideline and not a level that you think that must be reached. In my experience, 60% to 70% of the time, textbook targets are not reached. Also, do not expect price action to fall immediately and in a straight line to the textbook target of 1.6438. This is FX. Price action does not move in a single straight line. More often than not, it will look something like what you've seen over here. Down, up, and down, and up, and down again. So this 1.6435 textbook target, and this is with a weekly chart, I do not expect this level to be reached in the next 6 to 8 weeks. Okay, enough about symmetrical triangles. Next, I'm going to show you a head and shoulders top. This is on the EUROSTOXY, that is the euro against the Swedish krona. In the markets, it's known as the stocky. So it's EUROSTOXY, last closed at 11.2228 on the 21st of June. It has just formed a second shoulder of the head and shoulders top. Head and shoulders top being a bearish pattern, and the confirmation will be via a close below 10.99. This is the neckline. Once there is a close, a weekly close by the way, since this is a weekly chart, a weekly close below 10.99 will confirm that this has entered into a bearish outlook. Textbook target is at 10. That's all I have for you for currencies. I'll now move on to equities. Performing technical analysis on equities is more challenging, particularly if the signs indicate a bearish outlook. Now that's because equities are upward sticky, meaning that they tend to be biased to the upside compared to currencies, which are more biased to revert to their average price. The first stock I'm covering will be BMW, a German stock that closed at 87.7. Now, last week's close below the neckline of 87.27 should be considered as a bearish confirmation. This bearish pattern has a textbook target at 61.48, but there is a firm support at 68.57 that can prevent BMW from reaching its textbook target. The second stock is a name that we're all very familiar with, McDonald's, which closed at 259.39. I believe that it is also forming a bearish pattern, a double top. Completion of this bearish pattern will be via a weekly close below the neckline at 246.11. And once this happens, we can confirm that it has entered into a bearish outlook. The textbook target is actually pretty low at 190.16, but there are two firm supports at 220.44 as well as 229.86 that I think will present McDonald's some challenge to reach its textbook target. This next stock is named Richemont, a Swiss luxury goods company. It's also forming a double top, and the stock last closed at 138.95 on the 21st of June. Now over here we should wait for further downside and for a close below the 125.45, the neckline, to confirm that it has entered a bearish outlook. Until that happens, there are signs that it may not actually fall much further, because I see over here there's a downside exhaustion candle. Now this needs to be watched, because if the next price action, this is a daily chart by the way, if the next price action is a gap up from here, which means the opening price is higher than the last closing price and it closes higher, this three candlesticks will then together form a morning star candlestick pattern, which suggests further upside from here. And this will deviate Richemont, will take Richemont away from completing its double top pattern. The last stock for this video is Deutsche Bank, a German bank, which closed at 14.6 on the 21st of June. I believe it is forming a head and shoulders top, a bearish pattern. Now, if you take a look at the second shoulder, this looks a bit narrow. Textbooks suggest that the second shoulder should be around the height of the first shoulder, which is around 15.06. It doesn't matter if Deutsche Bank just closes below the neckline at 14.35, we will have an early confirmation, but I will not be surprised to see Deutsche Bank just rebounding from here to a peak of 15.06 before falling thereafter to complete this bearish pattern. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and the next video will highly be about new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.